G'day guys, and welcome to another episode of Shitty TAs with Shifty, where the Bitcoin price likes to tank and there's not much we can do about it. Unless you're a whale, buy that shit up. Let's jump into it. Right, so what I wanted to get into today, or tonight rather, it's like 12 in the morning here, good old Sydney time, is on the 1 hour chart, which I don't usually look at. It's I normally look at slightly higher time frames, so the 4 hour, the 1 day, the weekly. But look, sometimes when you have this kind of volatility, you might want to jump in and make some small trades, not financial advice, but it's a bit of extra income, so why the hell not? It also gives you a bit of insight as to how things on a bigger time frame might work, right? So for example, we'll look at a bigger chart here. So this is a different Bitcoin to USD chart. And I showed this one on yesterday's video. But the audio quality was shit. Hopefully it's a bit better this time. So what I talked about in yesterday's video was an ABC correction, right, happening. Bloody hell, it's getting a bit late, guys. So okay, 1, 2, 3. Oh, sorry, my bad. 4. Right, so you got that ABC correction, and I mentioned in yesterday's video that generally speaking, the C wave down is usually shorter than the A wave. Right, you can see that here in this large correction. This is on the 1 hour. If I switch out to the daily, it'd probably make a bit more sense too. And let's log into that one just a little. There it is. Right, so I hate that auto feature, right? Okay, so you can see that A wave, massive. B wave, not as massive. C wave, small for now. It could still retrace further, guys. So I did mention that in yesterday's one. If you did want to check out yesterday's video, it is a bit long, but only because I had some friends that requested some extra info, a few lessons, so I decided to make it a bit longer. I'll try to keep them short going forward, but point being, C wave is so far pretty short, and even if it does extend further, I personally don't think it would really go past this zone. Maybe here, possibly to 786. Right, generally they do go to the 786, and you're looking there at around 24 grand. Robert Kiyosaki, good old Rich Dad channel, put out a post saying that he's not going to buy any Bitcoin until it hits 24 grand. So there's a bit of confluence there. So that is a potential target. It's not definite, but it's potential. Point of all this, you can see that on a macro time frame, this is pretty much the layout. Big wave down, corrective wave, bigger wave down. Now you jump back into a smaller time frame, and you can see pretty much the same thing. So you've had a run up here. Right, I should probably extend that trend line down really, but I'm just can't be bothered at the moment. But then you've got this corrective wave down. You see that? So you've got A, B, and C. See that? And look, and if you do want to check out whether there's a possibility of retracing to the 786 or the 618 extension. There you go. This one retraced to the 618. So it is possible maybe we will only retrace to the 618. Who knows? Oftentimes you do find these kinds of signs in lower time frames. It's almost as though the whales just decide to kind of leave little breadcrumb trails for us to follow and say, hey, this is what's going to happen later, and you'll be surprised. Anyway, so we've had this big leg down and then that. Right, so currently it looks like we're trending in a bit of a channel. Technically speaking, you can't really call a channel or a pattern until you have at least 3 touch points. In this case, kind of do. You might want to consider that 1 touch, 2 touch, 4 touches really there. 2 touches, 2 touches, so that's 5 in total. A couple of touches down the bottom. So we could pretty much say with a fair degree of certainty that on the 1 hour time frame, we are looking at a bit of a channel. And in the macro scheme of things, we were in a massive channel here. Now let's just zoom out a little. We're in this big ascending channel right there. And you can see how we respected those fibs there too, the median line, the 0.5 retracement, 0.5 extension. And it currently looks like we're trying to break back in. Now, we have tried on a couple of occasions here. So there and there. And we were pretty heavily rejected. And that's a pretty, that's a slap, that one. So that's a pretty hefty fall. But it's necessary, because what happens? We go down here, we'll wind up, build up some power, because you need a lot of force to break through that. Right, picture this as Bitcoin thought that this is kind of like a piece of plywood, I can break through it, gets rejected. Okay, hold on, it's thicker than plywood, it's probably just pine, so tries to punch through pine, doesn't work, this shit's made of reinforced concrete, comes back down, it's like, okay, really gonna wind up now, and it's gonna sit there and try and ladder up, get that strength, and punch through. So that's where we are at the moment. We're currently bouncing between these fib levels. Right, we did duck down just a little bit over here, bit of a wick there, just a tip. But for the most part, we're respecting these levels, right? It might get us some little outliers here, but in general, you can see how we're respecting those levels. Now, before I end the video, I'm going to try and keep these as short as possible going forward. What I did want to touch on is another little tip in the charts, right? And I'm going to call them convergence levels or cross levels or whatever you want to call them, right? Points at which certain things intersect. We'll call them intersections, fuck it. So, what do I mean by that? Right, so you can see here, this channel trending upwards, right? To me, it's validated by the price action bouncing off those fib lines, right? And and obviously the fact that we had a few touch points there and there. What also confirms it for me is the way the price behaves around these intersections, right? Because don't forget, of the macro channel here, that blue line there, right? That is actually a fib level. That's a fib level that we were bouncing off since last year. So what happened right there? Right, let's zoom in a little. Right here, we only wicked it because it's an area of intersection. You had a fib intersecting with a fib, and the reason why this happens, why you get these big, see how this, as soon as there's a gap there, it pokes through a little, tries its luck, then it hits another fib. It's like, oh no, not backing off. So the reason why this happens is that bots, generally speaking, are programmed using fib algorithms. So they line their orders up along fib levels. Okay, so picture this like people congregating, right? You zoom in, it's like, okay, well, we've got a line of people here. Then we've got a line of people here, right? Suddenly, these people just becomes a crowd right there, right? So now it becomes like a protest, and everyone's protesting to kick Bitcoin out of the channel. It's like, nah, it left once, we don't want it back, get out, right? I know it's a negative way to think about it, but it's the only thing that comes to mind at 12:22 in the morning. So you can see how it behaves around these intersections. Okay, so the point I wanted to push forward is we got to keep in mind how it'll behave around these intersections, because we're heading to one right now. Okay, we're heading to the 0.5 extension, crossing to the macro, call it the boundary of the macro channel. We're crossing right there. Okay, so we are currently heading on an uptrend. Now, if you want to do a wave count, you can, by all means. You got like a 1, 2, we can even go 1, 2, 3, maybe that's 4, and possibly 5. So the fifth wave can definitely be bigger than the third. That is totally allowed, completely allowed in Elliott wave theory, as long as the third isn't the smallest wave, right? So we are heading towards that intersection. So I would expect, personally, if we do manage to break above this median line here, I would expect a pretty nasty slap back down to reality. But it's not a bad thing, because prior dump, that's a pretty low, right? This box here is like the macro 618 area. all the 236 if you're looking at it on the log scale. Right, I'll got into the Fibonacci extensions and retracements using the log method on those in my previous video. I could go into that again later on if anyone's interested, if there is anyone watching this out there. So if you are interested in that, drop a comment, let me know. I'm more than happy to explain it. I've got nothing else to do. But we are heading towards an intersection, that's the point. And we've got a couple more along the line. So if we do get slapped back down, right, we'll hope that the 200 EMA over here, which I like to call the Sasha Grey EMA because it's grey and it's significant. And I'm sure everyone out there has watched Sasha Grey at one point. So I'm hoping that if we do get up there, we can come back down, hold the median line and sit above the 200 EMA. And now I know this is only the 1 hour time frame. Okay, it's not significant at all. But if you are looking to make smaller trades, then this will help you, right? If we don't, then we better hope that we can break above this line before we get to that intersection, right? Because if, say, we do come here, this is how your patterns generally get formed too, if you want to think about it that way. Let's say we get here, right? Come back down, we test it. What's going to happen to the price? What pattern is that? Okay, that is a rising wedge. The rising wedge target is, generally speaking, the bottom of the wedge right there. So that means we're going to go back to square one, form another higher low, hopefully. But that is a pretty hefty drop. I mean, you're looking at a drop from 35.7 to potentially 33, call it 33 even, more or less. So these are the kind of things you can keep in mind. Intersections can play a really, really awesome role in your analysis. Really, they can actually help you identify patterns before they even start to form. Because you look at the potential there, the potential of this, if we do get slapped back down, you know, logically, potential is we could be forming a rising wedge. So at least that way, you know, from now, okay, well, if that happens, odds are it's a rising wedge. You might just get a feel of how to play it. Obviously, you want a confirmation that it is a rising wedge. So you would look for maybe three touch points here, 3 touch points there. But at least you have that prior knowledge through this that you can say, right, this might be what's going to happen. And you can make your plays accordingly. All right, guys, that's a relatively quick episode, hopefully, of Shifty's shitty TAs. Hopefully it wasn't too shit. One more thing I'd like to mention, that if we do happen to get above this line here, we could potentially be forming a W. And we all know W patterns are relatively bullish, usually, especially after a massive drop, which makes a lot of sense, right? To get a big bounce up. So we'll hope for that. If we do get above this intersection here, I'd expect a retest of the neckline, which is right there. Okay, so I'd call that neckline at around 35 grand. I'd expect a retest and hopefully hold that macro channel there as support and blast back in. And then from there, it's a matter of getting above the next lot of macro fib lines to potentially create an all-time high, as long as we can get past those intersections, which are much, much bigger. All right, guys. So hopefully this video wasn't too long. Hopefully it explained quite a few things here. You know, I hope it helps you in your trading, helps other people if, you know, you need to offer financial advice, financial assistance to other people, rather. Sorry, I was about to yawn there. And yeah, have a great week. If you're in lockdown, stay the fuck inside. And of course, customarily, don't get wicked.